Hello everybody and welcome back to HotCuppaCrypto. My name is Jordan. Today we have a market update. We have so much news happening in the financial markets. It is crazy, and in the cryptocurrency markets, guys. So if you want to follow along, subscribe to the channel, HotCuppaCrypto. Turn on the bell notifications. Thank you guys so much for the amazing support. As you guys can see here on the channel, we are growing and it is amazing. So guys, jumping straight into the financial markets for some updates. We have insane types of news. But first of all, on this huge sort of like 1 year and a half, it's about 450 days uptrend for this dollar here. For the dollar, right? The US currency, which is the dollar index, the DXY. It has been going up for such a long time, and we have had this massive correction. We are going to explain why. As you can see, it went down and we have had a massive dip. Now it is slightly recovering, but it is now using the previous support as resistance currently, and it's struggling to get back over it. Now we will see if the dollar explodes back up, but the high was 115 and it is now sitting at 110, nearly 111 now. If it goes past that, then it could start rising again. But if it goes, if it keeps going down, this could be the end of the dollar bull market. And there is a reason, significant reason actually why this might be the end of the dollar bull market, guys, which will mean that every other, all the stock markets, the crypto assets, and every kind of other asset will start to pump, including gold and commodities, finally, and also all other countries' currencies, like the UK currency, the euro currency, and all of the currencies that are not the dollar can finally recover a little bit, because this is for a significant reason, and that is that the Federal Reserve has changed the rate at which they have basically changed the rate at which they have decided to raise interest rates, because what happened was the US bond market. Let's show you guys. This is the US bonds 10-year. This is the most important story of the day, guys. This is so critical. But what happened was it started to rise out of control here, and the US debt, as you guys know, US has record debt. They were struggling to see this go higher, because the debt in America would have become out of control and unaffordable. So the Federal Reserve has actually started here, and this is why it went down, right? And the same thing happened to the dollar. So the main 10-year US Treasury bond market, which is their debt, the US debt market, and the dollar has collapsed since then, because the Fed has made a crazy announcement, which is that it's such a small thing, but it means the biggest thing for the markets, because it has the most massive impact, and that is that they have changed the rate at which they are going to continue raising interest rates. In other words, they are giving up a little bit on the fight against inflation, because everybody now expects them to lower rates, not keep raising rates as fast as they were doing before. And this is massive, guys. The biggest impact weighing the markets down was the interest rate rises, right? And it is it is now going to be less than what everyone initially expected. So some people are, if you actually go to this website, the CME Group website, you can see that the expectations for the next Fed meeting interest rate hike decision, and you can see that it is less than before. So the markets are now thinking that the Fed is going to slowly stop raising interest rates by first raising them less, and then eventually actually stopping, and then potentially cutting them. So because of that, this is great news for the markets. Everybody thinks that this is good news for the markets, so everything is starting to recover and pump, right? But this amounts to a Fed pivot, guys, because this is actually the big Fed pivot that everyone has been waiting for, but nobody knows it or has detected it. But basically, I think that this could be the main pivot decision, because, guys, if you check out what Peter Schiff is saying here, he's saying, I'm going out on a limb here and predicting that we have already seen the Fed pivot. Now, it wasn't a pivot in the sense that the Fed has gone from hiking interest rates to cutting interest rates. It hasn't gone from quantitative easing to quantitative tightening, but it is a pivot in rhetoric. In other words, it's a pivot in the way that they're talking. So they haven't actually cut interest rates yet. They're still saying they're going to raise them, but just slower than they were going to do before. And what it amounts to is an easing of monetary conditions. This is why the markets are starting starting to pump. This is why everything is starting to pump, right? Bitcoin is pumping, as we saw the last few days. Bitcoin is recovering, and all of the other assets are recovering, as we're about to show you here. But the Fed has been going forwards. Because what the Fed is going to be doing going forwards is starting to walk back just how aggressive its rate hiking campaign is going to be. So that is what the change is. The change may be subtle, but it will be significant. Instead of talking about the urgency of the inflation fight, he thinks that the central bankers at the Fed will start talking about how much progress they have made in fighting inflation. But they actually haven't. So basically, the 10-year treasury yield hit 4.3% in the US. It's highest since November, which we just showed you on the chart. When the national debt was under 9, it was the highest since 2007, when the national debt was under 9 trillion. Today, it's over 31.2 trillion, guys, the US national debt. So at 4.33% annual interest on that national debt would exceed 1.35 trillion more than is spent on national defense or social security, which in other words is a crisis, an unaffordable crisis that America simply cannot afford. But this was happening, right? So the Fed, this is why the Fed had to kind of go back on their interest rate rhetoric, and they started saying that they're going to start raising them less, right? This caused the US 10-year bond market to come down instead of rising up out of control, the high interest rate levels going out of control. But it also caused the value of the dollar to collapse and come down. And as you can see here, the dollar has significantly had quite a significant drop. Now it is having a slight bounce here, and so potentially recovering. But the thing is, this small drop was enough for all of the markets to pump. Now let's check out Bitcoin as the main example. Instead of going over all of the prices now, we can just quickly see that if we zoom out a little bit, let's show Bitcoin here. We can see that we had this pump here going on, right? So we did see this massive pump, Bitcoin going up now. So it's essentially like heading up, but that is a massive pump because it is a breakout from the last few months from Bitcoin, and it is pumping up here. So Bitcoin kind of got set free by this Federal Reserve decision. Now it's not just Bitcoin, it's actually all other assets. If we check out gold, it's actually looking quite stable, but it is not going down and making new lows against the dollar. That is very significant. And then we have oil, which is kind of rising up in price as well. But let's see the impact on the stock markets. So we did have the stock markets going up, S&P 500, Nasdaq going up, Dow Jones going up. They are basically not going down as fast as they used to be going. So now the UK currency, the pound, this and the euro reacted the fastest against the Fed pivot, right? So against the Fed's decision, because as the dollar went down, the two things that went up is the main things that went up is all other currencies, especially against the dollar. So the main currencies, the pound, the euro, as this example, even the Japanese yen actually went up against the dollar. Now they are slightly down today. However, if you see the past few days, they have had significant green candles. This is the pound as an example. So let's check out something here. The Fed's Peter Schiff said the Fed's feigned resolve to fight inflation lifted the dollar, right, causing commodity prices to fall from their highs. This is what has been happening the past few months and the years. Fall from their highs, but because falling commodity prices enabled the Fed to signal less aggressive rate hikes, the dollar is now falling, and commodity prices will soon hit new highs for people in the US, right? That is what is significant. This is going to become a crisis for the US because they are turning their debt crisis into something has to give, right? Something has to suffer, and they are turning their debt crisis into a currency crisis, a potential currency crisis. And if we do look at the dollar, it has started to fall down now. It is currently here, but it did make a newer low from the previous low. So it made a lower low here, and as you can see up here, it has made a lower high. So this is a significant technical trend. If this continues, so if it continues making lower lows and lower highs, then that is going to be the beginning of the confirmation of the end of the dollar bull market, potentially a dollar bear market, which means a massive bull market for crypto, potentially for stocks, and especially for commodities as well, but also other emerging market currencies and other currencies that are not US, so the pound, the euro, the Japanese yen, and other sort of European currencies as well. So they are going to be impacted greatly by this. So this is a massive and very, very important decision, guys. But the most craziest thing about this whole story is, why are they raising interest rates in the first place? Like, what is the main reason they are doing this, right? Which has caused all of the markets to collapse over the past year, right? And it has caused us to go into recession, basically, right? The reason they were doing all of this is to fight against inflation. Well, they haven't actually won. Inflation, in fact, is still high. In fact, this month it came out higher than the previous month in the US. So that is an uptrend. Inflation is actually still rising, but they are already giving up their interest rate raising fight against inflation. So it is literally the Fed is in between a rock and a hard place, because they have recession on one side, and on the other side they have inflation going out of control, potentially leading to even hyperinflation. So they have to pick either a recession or hyperinflation, or out of control, really strong out of control inflation. And that is the crazy thing, because right now they have opted to choose inflation. They have not got inflation under control yet. They are already starting to slow down the rate hikes and potentially signal that they are stopping the rate hikes, which is very dangerous, because it could cause the value of this dollar to keep collapsing down and then go down and down and down and become a really bad and crazy situation for the US. So we are going to continue following and see how this develops. Follow us for this story, but it will be, initially good for Bitcoin. We will see a huge cryptocurrency market continuation of a rally and potentially into a small bull market coming up here. So that will be significant. We'll be following that. Now we're just going to whiz through the rest of the stories. Crypto market today looking good. Bitcoin back above 20k. So Bitcoin has been pumping. We had a huge pump from Bitcoin. The cryptocurrency market is starting to recover. Ethereum is looking very strong. There are a few coins here that we've been checking out on Binance. Guys, the funniest coins that I've noticed that are pumping is Dogecoin. Look at this. It had a huge pump. It had plus 14% yesterday and then another 8% today. That is crazy. And then Shiba Inu, of course, is slightly copying Doge. So we can expect Shiba to explode if Doge, if Doge continues pumping up. We were looking at Cardano, DOT, Solana, Matic. Kind of all of the old coins are doing what Ethereum is doing, which is breaking out basically, and then following Bitcoin up significantly. We will follow along, see what happens. But guys, the Doge thing was part of Elon Musk buying Twitter. As you guys could see, Elon Musk did buy Twitter, and this is pretty funny, but we did see him arriving in the headquarters with a sink here, guys. It's pretty hilarious. Only Elon Musk would do this, right? He's just proper like chilling out, walking into Twitter with a sink. He doesn't care. Like, guys, that's what I love about Elon Musk. He doesn't take himself too seriously, and he doesn't take life seriously. He is hilarious, and I think the world is a better place with Elon. To be honest, he does definitely make things entertaining. So that is an awesome, interesting story. Elon acquiring Twitter, potentially integrating crypto into Twitter in the future, but potentially Doge as well. So the next thing. So this is about Bitcoin. Basically, as you can see, Bitcoin has had a breakout, and Crypto is pointing this out in the technical analysis chart. As I described to you earlier on, we can see Bitcoin making a clear breakout of the descending triangle, which it was supposed to potentially more likely than not break down from. But because of the big Fed decision about the interest rates, it has caused Bitcoin to escape out of its downward trajectory and potentially break out here. We're going to be following along and waiting for a stronger Bitcoin confirmation, but this is a very good sign that Bitcoin is actually potentially starting a brand new uptrend, which will be crazy. As we can see, guys, so many people got liquidated from this large Bitcoin move that went up, and we can see how many people got wrecked here on this website. You guys can go to CoinGlass and look at all of the shorts and longs for the leverage trading in Bitcoin, in crypto. So you guys can check that out. It's pretty interesting. Here we can see how many people are long, how many people are short, how many people are in danger of getting liquidated, which means this causes big price cascading candles and liquidations to go either up or down. And in this case, we did see Bitcoin breaking out and going up. If we go to the Bitcoin chart, as we can see, there was this massive candle for Bitcoin right here. The huge green candles that we saw the other day, which was this big breakout here. So yeah, we're going to see how that what happens next. Ethereum is deflationary since its launch, which is a nice thing to see, guys, but this is not a very important story. I just wanted to update you guys to show you that it has been going down and down, the supply of Ethereum. So as Ethereum starts to pump, this is going to cause a huge opportunity for people to make a lot of money potentially of Ethereum going up in value as the supply goes down. The next thing, the UK Prime Minister Rishi Sunak, NFTs projects still on track despite the market meltdown. The good thing here, guys, is the UK has had a new Prime Minister. Rishi Dishy, as we like to call him in the UK, wants to make Britain a global crypto investment hub. So he is very pro-crypto. This is actually good news for the UK, right? It's good to see that someone wants to adopt it. And then we did also the UK passed a new regulatory crypto bill the other day. So they want to help regulate the industry in a good way and help innovation flourish here in this country, which is actually finally some good kind of news for crypto and the UK, and something for us to be proud of. As we have also seen as well, the pound, our currency, has been recovering here since Rishi came into became the new Prime Minister, which is quite good here. They are announcing their new spending bill coming up in the next at the start of near November. I think it's like November the 17th now. So we're going to be looking out for that and updating you guys here on this channel for the latest news in the UK, of course, as usual, guys. So subscribe to the channel and let us know what tasty beverage you are tuning in with. Also in the UK, related to the banks, this is not very good news, but NatWest and also Lloyds Bank, guys, are reporting losses, massive losses. So the banks have had their stocks sort of suffering in the UK stock market. And if we quickly check out what's going on, we can see where is it here, the UK stock market, the UK 100 sort of did have this red candle, but it is actually already started to recover, so I think it should be fine. It's turned into just a massive red wick now in the UK stock market. So I think the confidence that Rishi brings is starting to help our main stock market here in the UK recover. As you guys can see, there was this huge down collapse of the UK stock when it was the whole Liz Truss and Kwasi Kwarteng scenario, where we saw the UK economic crisis happening a few weeks ago, and it really started to affect UK bonds and everything, caused this to collapse. But as you can see, they're quite recovering now. If we do check out the UK bonds, we can see as well that instead of their meteoric rise making everybody's mortgages in the UK and the whole government, the UK government debt, more and more unaffordable, it started to get out of control here, as we can see as well. Great news. In the past couple of days, since Rishi came in control, we have seen this falling down, which is absolutely great. We've had a massive downwards recovery in the UK bonds, so interest rates are going lower again, and we are starting to, the UK government debt is starting to become more and more sustainable or affordable, less out of control, basically, at least. So that's a good sign, very good sign to see Rishi sort of having a positive impact on the UK, and let's hope that we move on to certainly better future than the US is currently facing right now, with a critical recession, and also what's happening in Europe. So speaking about what's happening in Europe, guys, we do have one of the biggest European banks, Credit Suisse, absolutely collapsing, and it's really awful. It's like becoming a central bank crisis in the Eurozone. If we do check out their stock, this is Credit Suisse, and they collapsed 20%. Look at that, minus 20%, guys, in the past 24 hours. Let's zoom in. And we can see a massive red candle. Guys, this is not good to see for a European bank. One of the most safest, supposedly safest places to put your money, losing its value overnight. This is like the 2008 financial crisis that happened in the UK. Well, happened all over the world, but this time it is happening focused on Europe and the central banks there, and it is affecting Europe because the European Central Bank is doubling their interest rates to decade highs, fueling the European recession fears. So there is massive chaos happening in Europe because everything is going wrong over there. They're having the worst of everything. Like the UK is suffering, the US is suffering, but Europe is getting the worst of both worlds. They are suffering the absolute most, and their currency is not doing too well either. If we do check out the euro here, it has been going down and it has reached parity with the dollar. It went all the way down to 0.95 and now it's back up to 0.99. But as you can see, since the European Central Bank's announcement of the interest rates, which happened about 24 hours ago, there was this huge candle going down, and it is starting to, the euro, their currency, is really starting to suffer. So we are going to see how that plays out, of course, in Europe. But this is a big thing that affects the global economy. So we can see that everyone is talking about the European Central Bank, how they are going to stop Europe from going into an even worse recession than the UK and the US faces, and also the Europe's spiraling debt out of control as well, because Italy has problems, Germany has problems, many of the countries have crazy amounts of debt. So we're going to see what happens there, guys. We'll see you guys soon in the next videos.